Okay, hello everyone. Welcome to another webinar Wednesday by Smartkarma. I'm Michael Tagos from Smartkarma's marketing team, and I'll be your host today. And I'm delighted to welcome Insight Provider Victoria Lee, who will be discussing her recent Smartkarma original on China Auto Parts A-shares. Victoria is an independent insight provider with over 18 years of experience focused on Chinese autos, industrials, and energy. And she's worked at firms including BNP Paribas, Barclays, and Credit Suisse. Victoria, thank you very much for joining us today.
Thank you, Michael. Hello, everyone. Today we are going to talking about China Asia auto parts. The recent tumult in the auto sector creates significant opportunities and risks for the companies involved. However, companies that are driving these trends are largely listed in the Asia market, and lack of market communication, limited financial and operational disclosure, and low breadth of analyst coverage in these markets has meant that there are quite a few underappreciated companies in these markets, which have been overlooked by international investors. Let's go to page 3. In this report, we look at the key A-share, which is MSCI A-share listed players in the industry through the lens of 5 industry trends in 5-year horizon. Please note that the impact of COVID-19 is not discussed in this report. So here we have 8 companies covered. Our top buys are Changzhou Xinyu and Ningbo Joyson Electronics. Next page, please. So first of all, growth of passenger vehicles components suppliers would outperform those of commercial vehicle component suppliers. In 5-year horizon, we believe auto suppliers with big exposure to passenger vehicles would outperform those exposed to commercial vehicles. The key reasons are, although China's PV sector had negative growth in 2019, annual PV sales still have upside. This is because China's motorization rate remains low compared with other major auto markets. We estimate China's PV shipment will grow at a CAGR of 5% during 2020 to 2025, with growing disposable income per capita and improving car autonomy functions. While commercial vehicle market, especially truck, is matured in China. Currently, market demand is mainly from replacement. In China, commercial vehicle demand is mainly from logistics, which includes cargoes and passengers, and construction. China has already experienced a peak period of infrastructure construction, which it would not be able to repeat over the next 5 years. Vehicle demand from freight transport might be boosted in the next 2 years due to China's new toll road charge policy, which took effect on 1st of January 2020. Please refer to our Sinotruck report before. However, we estimate China's road freight transport might have peaked in 2018 due to central government encouraging on-rail freight transport. China's road freight transport declined 13% year-on-year in 2019. Vehicle demand from passenger transport goes down year-on-year since China's high-speed railway network is formed. Next page, please. Key drivers of the auto components industry. The first driver is increasing share of new energy vehicles. With support from the governments of all major countries, it's clear that NEV, new energy vehicle, would dominate the market in the future. We estimate China's NEV passenger vehicle shipment to contribute 10% of total passenger vehicle shipment by 2025. Increasing sales proportion of NEV is leading to, first of all, demand from engines, gearbox, and emission control is changing to demand from batteries, motors, and related control systems. Secondly, reducing car weight by using lighter alloy or non-metal materials, such as increasing the use of glasses, replacing steel parts with aluminum alloy parts and magnesium alloy parts, etc. In this environment, traditional OEMs have to reduce their in-house engine productions and purchase batteries, motors, and related management systems from third-party suppliers. Traditional steel parts suppliers would lose market to glass suppliers and aluminum and magnesium alloy or other lighter parts suppliers. Typical beneficiaries include Fuyao Glass, Huayu Auto, and Wanfeng Auto Wheels. Next page, please. The second driver is rise of autonomous driving. China officially set a timeline for auto sector's autonomous driving, which requires mass production of conditional automation cars, that is to say L3 level cars, and bring to market of high automation cars, that is to say L4 level cars, by 2025. In this trend, demand on new auto parts are created, such as sensors, carbon electronics, and softwares. Typical beneficiaries include Changzhou Xinyu, Joyson, and Huayu Auto. Next page. The third driver is import substitution, which is opening automation parts market to local suppliers. 2020 might be a milestone year for some local auto parts suppliers. Tesla Shanghai targets to raise its auto parts localization rate from 30% at end 2019 to 80% by mid-2020, and then 100% by the end of 2020. Tesla Shanghai came on stream at end 2019 and is expected to deliver 100,000 Model 3 cars. Based on related auto parts companies' announcements by the end of the date, the biggest beneficiary of Tesla order actually is Ningbo Shushen, which is not covered in this report, while suppliers who are already in Tesla's supply chain include Joyson, Fuyao Glass, Huayu Auto, and Wanfeng Auto Wheels. Possible reversal of globalization led by COVID-19, although we don't want to see it happen, would also speed up import substitution process in China. The fourth driver, JV partners becoming technology leaders in their own right. Companies that were junior JV partners of global component manufacturers buying out their JV partners. Some are buying global technology leaders to leverage their technologies in China. Joyson, Fuyao Glass, Huayu Auto, and Wanfeng Auto Wheels are exposed to this theme. The last driver is international expansion. Chinese auto parts companies are using their newfound manufacturing, price, and technology expertise to expand into international markets. The companies that are exposed to this theme, including Changzhou Xinyu, Fuyao Glass, and Wanxiang Qianchao, and Linglong Tire. Page 8, please. Stock picks. This chart shows gross profits breakdown of all the 8 stocks we initiated. Among them, pure players in high-growing subsectors are favored, such as Changzhou Xinyu and Wanxiang Qianchao. And next page. This chart shows these listed companies' exposure to downstreams. We prefer passenger vehicles part suppliers over commercial vehicle part suppliers, which mostly the first 5 stocks have bigger exposure to passenger vehicles. Next page. Among passenger vehicle parts suppliers, our top buys are Changzhou Xinyu, followed by Ningbo Joyson Electronic, Fuyao Glass, and Huayu Auto. Our main underway is Wanfeng Auto Wheel. In commercial vehicle parts segment, we prefer Wanxiang Qianchao and Linglong Tai. We suggest investors to avoid Weifu High Tech. Page 11, please. Valuation. In Asian market, PE ratio is still considered as the most common valuation methodology. Among these stocks, Xinyu and Joyson are the most expensive ones among passenger vehicle parts suppliers, but still attractive compared to their expected earnings growth. Next page. Key risks. On a sector-wide base, the key risks include weaker than expected NEV sales, especially right after government subsidies quit in 2021, slower than expected technology development on autonomous driving functions, slower than expected car users' acceptance on autonomous driving functions, which has low possibility to happen in our view. Unexpected challenges on overseas expansions, which might hurt companies' earnings in short term. Unexpected technology advantage loss after taking over JV's rights. OEMs switching back to imported components due to quality issue, which has low possibility as well. Key downside risks on buying our preferred stocks includes company strategy change, lower than expected marketing capability, higher than expected raw material cost goals, unexpected product quality failure, capacity expansion delay, etc. Key upside risks on unfavored stocks are newly acquired non-core business growing faster than expected, new unexpected successful M&A, etc. Page 13, please. In the report, we initiated on 8 stocks. Due to time limit, here I would only go through our 2 top buyers, Changzhou Xinyu and Ningbo Joyson Electronic. Next page. Changzhou Xinyu is our top buy. Why we like it? Because of its expected fast earnings growth driven by smart auto light penetration rise, consensus upgrading possibility, and the relative attractive valuation. Page 15. Changzhou Xinyu is a pure player in auto light sector. Smart auto lights penetration is increasing. This means the company's headlights ASP would increase from currently estimated RMB 1,000 per car to RMB 11,000 per car or above in the next 5 to 10 years. If you look at page 16, we have different type of lights price listed. So smarter lights basically are more expensive. This is gonna drive the company's ASP increasing significantly in the next 5 to 10 years. Smart auto lights penetration increase would drive Xinyu's gross profit growth with a CAGR of at least 32%. Page 17. Client base expansion penetration increase might double Xinyu's revenue further. Currently, Xinyu has about 40% revenue from FAW Volkswagen, followed by FAW Toyota, Chery, and SAIC Volkswagen. Top 4 clients whose total market share in China was 25.6% in 2019, contribute nearly 77% of Xinyu's revenue. Moreover, Xinyu's penetration in its existing clients is below 50%. Except FAW Volkswagen. In recent years, Xinyu is gaining orders from new clients, including Japanese brands, which have 21.3% total market share in China, and luxury brands such as BMW Global and the Beijing Mercedes-Benz. If Xinyu gets 50% of Japanese brands' lights demand, its revenue would increase by additional 150%. Next page. Overseas capacity expansion to explore overseas demand. In 2018, Xinyu had only 2.5% revenue from overseas. In 2019, Xinyu announced to build auto light factory by January 2023 in Serbia, with capacity of 5.7 million units. The new plants would cover demand from GM, Chrysler, Volkswagen, Mercedes-Benz, BMW, and Peugeot. Xinyu estimated that the new plant would contribute 14.83 million euro of pre-tax profit, equivalent to 13% of Bloomberg consensus pre-tax profit 2019. Page 19, please. China's major auto light suppliers' market shares are stable, but industry consolidation is still possible with product specification upgrade trend. In 2018, Xinyu was the only local company among top 6 suppliers and ranked number 5 by market share in China. All the others have background with global leaders. Here, Hasco Vision Tech used to be a JV between Huayu and Kyoto and became 100% owned subsidiary of Huayu lately. In the past few years, market shares of top 6 have been quite stable. However, with the technology upgrade for smart auto lights, smaller suppliers might lose their market share to top 6, including Xinyu. Page 20. Valuation. Xinyu's valuation might look a little bit aggressive compared to peers. However, we believe the market significantly underestimated Xinyu's earnings growth in the next few years. We estimate Xinyu's net profit CAGR would be 40% during 2020 to 2021 without impact from coronavirus, which indicates 20.8 times PE on 2020 and 14.8 times PE on 2021. Secondly, Xinyu's 5-year historical PE range is at 15 to 52 times with average of 28.8 times, which indicates its current valuation is at a low range. So we suggest buy on Xinyu due to its expected fast earnings growth driven by smart auto light penetration rise, consensus upgrading possibility, and the relative attractive valuation. Page 21. Ningbo Joyson Electronic. This is another top buy. Why we like it? First of all, if we go to page 22, consolidation on KSS and Takata to improve profitabilities and gain market share. This would increase Joyson's net profit by 30%. In 2018, the company established Joyson Safety Systems, JSS, to integrate and restructure the recent acquired auto safety system assets, mainly by reducing redundant capacity and consolidating supply chain management, marketing, and client management. The integration process is expected to complete by 2021, which would improve JSS's gross margin and net margin from 16.7% and 3.8% respectively in first half 2019 to 20% and 5% in 2021. Margin improvement would increase Joyson's net profit by 30%. In addition, passive auto safety system sales would be driven by increasing safety consciousness in developing countries. IHS estimates global active safety market size would double by 2025 from 2017. Page 23. Well-positioned in L3 level autonomous driving tech would translate into earnings surge. This would drive Joyson's auto electronics sales to grow with a CAGR of 50% during 2019 to 2025. So far, Joyson's key achievements in this area include its new steering system offers adaptive steering, driver management system, etc. for achieving L3 level automation. Its first generation 5G vehicle-to-thing product will start mass production in 2021. In Europe, latest IVI in-vehicle infotainment system based on Android Auto co-developed with Audi and Volkswagen starts mass production in 2020 with order value of RMB 10 billion. IVI system for Benz MFA2 is started with order value of RMB 9 billion. During first 9 months 2019, new orders on electronics above RMB 20 billion versus estimated RMB 10 billion sales in 2019. R&D with global OEMs on L4 functions such as remote control driving, interaction among vehicles, pedestrians, and facilities is in process. Moreover, Joyson's BMS battery management system for EV client base is expanding from existing Benz, BMW, and Geely to Nissan, Ford, SAIC GM, Volkswagen supply chain. Joyson has RMB 13.1 billion order on e-mobility at end June 2019. That's why we estimate Joyson's auto electronic sales to grow with a CAGR of 50% during 2019 to 2025. Next page, please. Leveraging the key overseas acquisitions to increase penetration in the China market and gaining market share quickly. As all the key assets previously based outside of China, Joyson's major clients are OEMs in Europe and America, with 78% revenue from overseas in first half 2019, benefiting from solid client relationship with global OEMs. Joyson's orders from Chinese OEMs JV brands surged since 2018. In China, IVI systems for MQB and MEB platforms for FAW Volkswagen and SAIC Volkswagen started mass production in second half 2019 with estimated order value of RMB 19 billion. Lately, it entered Tesla Shanghai supply chain for auto safety products with estimated order value of RMB 1.5 billion. By the way, Joyson is Tesla US supplier with existing order from Tesla of RMB 7.5 billion. Next page, please. Valuation. Since the acquisition of Takata assets, Joyson's traded between 12 to 39 times PE. Based on Bloomberg consensus, Joyson trades at 19 times PE 2020, which is quite attractive compared with its expected earnings growth in the next 2 years and its own historical PE range. We suggest buy Joyson. I will stop here for questions.
Great. Thank you very much for this, Victoria. Before we get to the questions, let me just note that this webinar has Chatham House rules. So please do not reshare the contents of this webinar on social media or elsewhere without express permission. So let's get to some of the questions. So one question from the audience, and you kind of touched on it a little bit, but maybe you can elaborate a little. So how has the market share changed for the companies that you see becoming global technology leaders?
Sorry, could you repeat the question again, please?
How has the market share changed for the companies that you see as global technology leaders?
So among these top two buyers we mentioned here, currently Joyson is technology leader in its own area. That's mostly because of it's growing up by M&A those global leading companies overseas. As for the so basically what I mean is this company is already kind of leading leaders in its own subsector. As for Xinyu, this is because this company is a private owned company with very due diligent management team. It is gaining more and more respect and good feedback from its partner OEMs, and by cooperate with those partner OEMs further, I think it will also learn and grow with their partners to be a leader in the future. But I'm afraid for this company that will take a much longer time.
I see. So I wanted to talk a little bit about the big elephant in the room, I guess, which is COVID-19. Your insight kind of didn't really go in depth in that respect, but I kind of wanted to get your view on how should investors think about the impact through 2020 and beyond.
Actually, except the short-term negative impact during the lockdown. Basically, during lockdown, everything is suspended. Nobody can really make money. Mm-hmm. Other than that, I actually think the COVID-19 is a positive to local auto parts manufacturer in a long term, because this is speed up the import substitution of China auto parts. Lots of OEMs have to trying to find have to increase their localization rate to reduce the short term, or probably which would be continuous, which would continuously happen in a longer term, the suspension of their existing supply chain.
And speaking of auto parts or OEMs, where would you sort of guide investors in this regard? Like where should they buy?
Well, this is a good question. Actually, I would prefer auto parts if the investors can freely choose to put their money either into Hong Kong market or Asia market. I think if we choose the right auto parts who are gonna benefit from the long-term uptrend of the industry, such as the increasing NEV penetration, auto parts would be a better buying option. While if you can't really freely move your money between Hong Kong market and Asia market, that's literally not bother the investors actually, because very interesting thing is most OEMs listed in Hong Kong market, and the most auto parts listed in Asia market, and also because for especially about that NEV penetration rising, for OEMs, most of them are traditional OEMs. So the increased penetration of NEV actually offsets the demand on the traditional ICE models, car models. So for OEMs, in this trend, they are not really gain anything. They have to change to catch the market share, to catch the demand change. But for auto parts, who can see their demand grow literally from 0 to 100.
Right. You mentioned both in the insight, but in this presentation about how basically the market is turning towards passenger vehicles rather than commercial. But I was curious, would any breakthroughs in electric vehicle technology and autonomous driving increase demand for commercial vehicles again?
That absolutely will happen, but so far, because the different purpose of passenger vehicle and commercial vehicle, drivers of commercial vehicles has more tolerance on uncomfortability of driving compared to passenger vehicles. So for commercial vehicle, in a very long-term view, all these things currently happening to passenger vehicle will happen as well. But I'm afraid that will take a much longer time to see it. finally complete.
I see. When it comes to some of these A shares and some of their Japanese peers,
Yeah.
how do you see their margins in this regard?
Do you mean the auto parts suppliers' margins
Yes, that's
for
correct.
the Japanese brands components?
Yeah.
That's actually really depends on individual products and individual deals they talk to they made with their customers. So it's quite difficult to give a broad view saying like Japanese brands components margin is really higher or lower than other brands. But there's some feedback from auto parts suppliers saying generally the JV brands is giving more payment, better payment terms versus local brands, which means if you do more business with JV brands, your cash flow pressure is much less.
Right. I think this is a good place to wrap it up. Victoria, thank you very much for your time.
Thank you, Michael. Thank you, everyone.
Just to repeat again that this webinar has been on Chatham House rules. So again, do not reshare the contents of this webinar on social media or elsewhere, please. Do feel free to send any more questions to research@smartkarma.com. And finally, do please note that Victoria is available for bespoke research requests. So please contact your Smartkarma account manager in this regard. Thank you, everyone, for joining us. And thank you once again, Victoria.
Thank you, Michael. Thank you, everyone.